have been primarily 10 plus years of experience into startups, namely Flipkart during its early stage from 2012 to 15, where I was part of first couple of big billion day sales of Flipkart, and the early days where Flipkart was India's number one e-commerce. It still is, but yeah, Amazon has also made big inroads. But yeah, that was the my starting of my career, and post that I've led teams at Quicker, Nutanix, and into deeply into the fintech industry from the past few years, alongside also working on angel investing, which we'll cover here. So yeah, coming to this, basically, what is all this hype that we see around startups, and how it's totally always in the news. So basically, it is that 14,000 startups have been recognized by India, and this is up to 20 times in 5 years. This is up 20 times from the last 5 years, basically. So it's been going on increasing, and now India has become the third largest startup ecosystem in the world. So it's going to soon be on par with the Bay Area in terms of startups, because we all know that, say, the cost of labor in India is much lower. So people can get a lot of more work done in India compared to the same amount of, they have to pay maybe we can get 3 or 4 Indians employed in, say, one US engineer's salary. And, we Indians are known to work hard. So we add a lot more value. No offense to people from US if anyone's here, but yeah, I mean, Indians are known for being hardworking and building great startups. And also, like, we have had 100th unicorn of India recently, which was valued at 333. I mean, overall valued at $333 billion, which is a significant chunk of the economy. And yeah, even India's Commerce and Industry Minister Piyush Goyal had tweeted that India hits a century in style and 100th unicorn. So basically, it started long back, I think, in 2011 with InMobi being India's first unicorn. And the next few years, like, we saw a few startups becoming unicorns. But yeah, the last 4 or 5 years have been massive for India and startups in general, because yeah, there have been unicorns after unicorns, and every month you see that there are newer unicorns being added. And yeah, in the past, people were not too much aware about the startup and funding, etc., and founders and how people can invest. But I think now, with first season of Shark Tank India, and which I'm sure at least most of you here would have seen at least one episode or more of that, it gives a great opportunity to both founders, as well as, okay, that is a great show for founders who can present their product and get funds for them if they are building a great product. And likewise, like, we here we'll get in this workshop, all of us, to be a part of being mini sharks. I mean, you can get an opportunity to invest in the next big startup without you having to make a hole in your pocket. So we'll look at that in the further slides. So yeah, coming to the basically how it's reshaping, startups are reshaping the world. So combination of tech and business innovation is what is redefining a lot of things on how the world is operating. And for example, in the year 2012, we just had 2 tech companies in the top 10 most valuable companies of the world. Whereas fast forward 1 decade down the line into 2022, we have 8 tech companies in the top 10 most valuable. So it shows that how much important it is for technology. I mean, how much value technology companies are adding to the world, and how investing in the right company or being a part of it as well, can help big time in terms of your investments and also in general career prospects. So yeah, those 8 tech companies are Apple, Microsoft, Facebook, Google, Amazon, Tesla, Nvidia, and Tencent. So just naming them for people who, most of these are identifiable by logos, but yeah, like, couple of you might not be aware of, say, Tesla and Nvidia logos. So I thought I'll touch base on that. And yeah, coming to this, that we have.
Before we move forward, I just had one question, and it just came up to my mind when you said that 8 of the top 10 companies in the world are actually based on technology, right, and business innovation.
Right.
So do you agree with this, that whether we be a part of their investment journey or not, but going forward, this trend would increase only, and then there would be more technology and business innovation companies that would actually dominate the world?
Yes, that's exactly the point that we are trying to thank Salman for bringing that up. So basically, now these 8 out of the 10 are the current most valuable, but this list is sure to change, say, maybe if not 1-2 decades down the line. And we in this event as well are going to see some of the startups, or get access to how we can identify startups who have the capability to be amongst this list, who can become the next big thing. For example, from an early stage till now, you would have seen the rise of, say, Paytm, Zomato, Ola. So likewise, we'll identify the next big set of companies, not just from India, but also from the Bay Area, Silicon and EMEA region. So yeah, we look at that and how we can evaluate a startup and invest very early in the cycle. The earlier you invest in a good company, the more the returns you make. So we'll cover that. Yeah, great question, Harman. All right, so going further, yeah, basically, we have heard a lot of in recent times ki startup funding kam ho rahi hai, and there's not too much startup funding happening these days. But just to put it in numbers, although we see that yes, if you see here that from Q3 2021 to Q1 2022, it has slightly gone down, say from $17.1 billion to 11.7, which is okay. I agreed, it has lowered a bit. But if you see that just a couple of years ago, 2020, the entire year's funding was $11.8 billion. And just this year's Q1's in startup funding amounts are 11.7. So what was happening for the full year startup investing couple of years back is now just happening in one quarter. So it's a great time to be part of this investing journey as well. And yeah, of course, if you guys are building your own company, that's a great time for that as well. And I'll be happy to learn more about your company and possibly help raise funds as well for your company if it's exciting enough. But yeah, this workshop we are focusing majorly on angel investing, and let's stick to that for now. So yeah, like I mentioned, that India is already the third largest, and it's becoming the center of startup and tech. So soon it's likely to become the tech capital of the world. And like the value that and the hard work that Indians are known to add, yeah, I'll not be surprised if, say, a couple of years down the line, you already see that most of the players here have Indian CEOs, be it Google, Sundar Pichai, be it Satya Nadella from Microsoft, and even recently we had Twitter, who Elon Musk is in talks to take over, but he's also an Indian. So a lot of these big companies have Indian CEOs. So yeah, hard work ultimately does get recognized. All right, going forward. So yeah, we'll do a quick poll to keep the session interactive as well. So request you guys to name any startup which you guys feel will become one of the biggest companies in India. If you can post that in the chat, we'll just quickly have a look at what you guys think, which is the current startup which you feel will become one of the next biggest companies of India.
Yeah, Avinash is Cred. Shubheka is Cred. Sunil Zerodha, Cred, Zerodha. Then there is a company TTW community.com. Anuj says Zepto, PhonePe, Zerodha, Cred, Razorpay, Traya Health, Zerodha, Furlenco, Raminder, Nilesh. What do you think, Rohan? Out of these all companies, what do you think would be one of the
biggest? I think Cred and Zerodha are very good options here, and of course Razorpay as well. But yeah, if you ask me my personal opinion, I think Zerodha is on par to become, because they are self-sufficient and they do not been raising any funds and still profitable. So yeah, I would say amongst these, Zerodha would be my pick if I had to put money. But yeah, all of the others are equally well backed as well. For example, Cred is by Kunal Shah, who's a seasoned founder, and he was also the founder of Freecharge. So Cred has also been doing really well, and yeah, they are also on par to become one of the biggest players. And Razorpay is also doing great things. Like they recently raised another big round of funding, and yeah, they are very well established in the payments space. So one common theme that we are seeing here, what people are saying, Cred, Zerodha, and even Razorpay, a lot of these are fintech companies, right? And yeah, we'll focus more on, like our deals as well. We focus quite a lot on, differentiator fintech companies and how they're making an impact. And of course, other verticals as well, like B2B SaaS, enterprise, e-commerce, and, mobile only, all these as well. But yeah, like fintech is one major area where customers see the impact. All right, yeah, thanks guys for sharing your startup ideas on which will be the biggest companies. And yeah, let's move forward. So yeah, now that we heard a lot of names of companies that can become the next big company. So would it be possible for us to be part of this massive growth story? Like, these companies have already grown quite a bit, which you all named, but do you know about companies which are not yet at that scale but can grow to that level and even much bigger, and then be part of the list of top companies that we saw in the previous slide? So we'll look at some of that going forward. So coming to basically what startup investing is, it is basically a game of home runs and grand slams, to put it in sporting terms. So for example, Peter Thiel, who was one of the early investors in Facebook, he had invested just $500K. And I'm saying just, okay, it might be a big amount at that time, but yeah, like, it was not just him, it was him and his group of investors who had invested. And yeah, its current value is grown 2000 times to $1 billion. So, like, typically our traditional forms of investment, say FD or SIP and stuff, do you think any of those can yield such kind of returns? Please comment yes or no in your chat window. Yeah, to name some more, Dick Costolo had invested in the early stage at Twitter an amount of $250K, and that's grown 1200x times to $300 million. So, that is another massive rise. Like, if it's not 1200% that we are talking about, it's 1200x. X is that 250K 1200 times grow kiya, so it is $300 million now. And these are the US based ones. To come to Indian companies, even folks in Zomato have seen 2100x growth. Flipkart, which I was myself a part of, has seen 6000x growth. And it was early stage of my career, so I hold very few stocks, but yeah, like, the value has risen tremendously. And likewise, Bharat Pay is gone up by 1200x, and Oyo is gone up by 3000x. So this is just a small list, but there is a massive list of things which we can list down. But yeah, for the sake of convenience, I've listed down some well-known brands here, but there are a lot more, like interesting startups which have grown at this scale and even bigger. So let's try and understand the startup funding life cycle. So basically, there are different stages, right? Which you might have heard: Series A, Series B. So what do all of these mean? Basically, the first stage of any fundraise of a startup is called the pre-seed stage, and pre-seed and seed rounds comprise the early stage. So what exactly are these? So pre-seed stage is when the company is at a conceptual and ideology phase, where, like, there's no say working model or something, but the idea has been thought through, and how they will implement has been thought through. And typically they're looking to just raise, say, less than $1 million at this stage, because they just want to start building on their ideas and grow on that. And typical valuation of a good company at this stage is around $1 to $3 million. Next comes the seed stage, where companies have a MVP, like a minimum viable product, ready, and have a prototype ready, so they can showcase this to their investors, or they have few beta customers as well, sometimes more than beta, like full-time customers as well. And the typical raise that these guys look at is in the range of $1 to $2 million, and at a valuation of $3 to $10 million. So valuation also we'll look at in the future slides on how one should target the valuation of the company. Coming to the next stage, which is Series A. Now the company has been slightly there for a few years, couple of years at least in the market, and they have kind of discovered their product market fit. And at this stage, the company is typically trying to raise between $3 to $12 million at an overall valuation of $10 to $30 million. So if you see, this is growing by a few multiples, from 1 to 3, around 3x is 3 to 10, another 3x is 10 to 30. So this should be pretty logical, because if it's a tremendous rise, that can lead to problems in the subsequent rounds. We will cover that in detail in further in the session. So coming to Series B and plus stages, now the product has been well established and is accepted by customers and has a good audience. There are good reviews pouring in. So at this stage, the company is working at scale, and the raise at this stage that is targeted is around upwards of $10 million, and typically at a valuation of $100 million or north of that. And yeah, coming to the public stage, like when a company goes public, that is, you hear, right, IPO, you get a lot of, say, IPO, Paytm went, Zomato went, stuff like that. Though when LIC also recently went public. So that is when company shares are available publicly to buy. At this stage, It's not available to the general public, but we'll cover in this workshop how we can also get access to such deals. But yeah, when a company is public, so that time they have diverse revenue streams, and typical valuation at which a company goes public is upwards of $500 million. And they don't need to raise at this point, right? Because at this point, company's gone public. So how they raise money is like the shares are open to the public to buy. So at this stage, public buys their shares, and that's how they get their money. And why we have mentioned dollar here is because had you invested in any of the early stages, and when the company goes public, you will make massive returns, right? This is again like how we saw the previous slide, number of times X. So that X can be any number, like number of times the company grows. So just imagine like whether you would want to buy LIC or Paytm shares, at a time when they are listed publicly, and you want to stand a chance of lottery system where you can have to bid for their shares and maybe you will get it at the time of listing? Or would you want to invest in them, say when they were really small but identified by a bunch of marquee investors that this is the next big thing, and had you invested there, it would have risen like like what, say LIC went at 950, you may have invested at it at 50 to 100 rupees share price at an early stage, but that 950 is what people were bidding for in the Zerodha and other demat accounts to stand a chance in a lottery to get allocation. So that's how the different fundraising rounds differ. All right. Any questions on this anyone has so far?
Guys, if you have any questions, you can just let us know in the chat box and we can pick those up and then we can discuss, on all those things.
Yeah. We'll also give a time at the end of the session, but in terms of the stage or anything related to that, anyone has any questions, we can take maybe one or two now, or else we'll proceed and then you can ask later.
Yeah. So Sunil Garg is asking how to reach people who can invest in pre-seed phase. Maybe he's a founder himself and then he's, asking.
Sure. Sure, Sunil. Yeah, very nice question. And we'll see that in the further slides. So I am also one of the folks who invests in companies at pre-seed stage. And there are a bunch of different portals as well, where I'll tell that as well, where you can, look at which companies are investing in an early stage and how you can get access to that. I'll cover that in the workshop.
Yeah. Satya had an interesting question. He said, there is this funding round series A, B, C, D. So he says, does it go to only F? Anything thereafter?
Typically, as per my experience, I've seen that around FG is where, after that companies aim to go public, because the valuation here we see, right, it's increasing by a multiple, and at beyond some point, it becomes unreasonable to raise funds at that valuation. So that is when companies look at going public and then, start selling their shares. So yeah, that's a call that companies have to take based on their scale and growth and revenue numbers, and discuss with their board of investors and board team basically.
Yeah.
All right. I think we'll pick the other questions towards the end and go ahead now. So yeah, now that we understood the different stages, we'll also understand the startup funding life cycle. I mean, at what stage, who are the people who invest? So at early stage, typically the angel investors, who some of you already are, and some of you can become by learning from this workshop, will become angel investors. Micro VCs typically invest in early stage investing, and these have the highest returns, like how we saw the graph, right? Flipkart 6000x, Zomato 2100x, and that are the kind of returns that are possible for angel investors. But that comes with a cost, that it is a high risk form of investing. But we will also, during the course of this workshop, cover how we can minimize this risk. So we will be guaranteed of getting high returns at a almost 0 to 1% risk rather than a high risk. We'll cover that in the further slides. So going ahead, in the series A and B stages and little further, those are typically called the growth and later stage of the company. And bigger VCs like, Sequoia, SoftBank, Tiger Global, and PE firms invest at this stage. And here as well, there are high returns and high risk, but slightly lesser returns than this stage, because this is obviously during the conceptual and early POC phase, whereas this already there is a working prototype ready and they have a few customers on board. And yeah, of course, when it goes public, it's for retail investors and mutual funds, and like once LIC or Paytm, Zomato, etc., to name a few, have gone public, you can buy it only at the price that they're being offered, and we will see, say, 50 to 100 rupees upwards and downwards, not more than that. So there is low returns and low risk at that stage. So yeah, now let's focus on how one should create a, like, I'll share my framework for early stage startup investing, and how you guys can also utilize that to identify the right set of startups. So this framework has worked pretty efficiently for me, and I have invested in over 30 plus startups now, and a lot of them, most of them are at great returns right now. I'll also showcase my portfolio in a while. So basically, what are the factors that you should identify while doing the investment in an early stage in a startup? So basically, you should first get the right deal flow. That is, you should have access to a large number of deals. Only if you have, say, access to multiple deals, can you evaluate which amongst each other how these startups are. And like, if you are getting, say, 3-4 startups, and you have to compare, it's a very small number, right? 3-4 companies can easily go bust. But say I am getting access to 100 plus deals every week, 100 plus startups, and amongst that I filter and pick the best 1 to 1.5% startups which I invest in. So I'll also be sharing that, how I finalize on those, and how I can share those with you as well. Going ahead, we need to select the right deal for investing. Like I said, that you should pick the right deal. We'll also look at how to identify picking the right deal in the subsequent slides. And we need to manage the risk through diversification. So rather than investing large amounts in one startup, you should look at diversifying and investing smaller amounts across multiple startups. So that is typically the basic framework for early stage startup investing, which like I typically call it as GSM, as the short for the letters. And that's how I recollect this framework for early stage startup investing. And yeah, we'll be happy to share this with you as well going forward. So how to get this deal flow, right? I said that we should want to invest in pre-seed and seed stage at a really good company. But how do we get access to these deals? So there are we can hunt these deals through the various platforms like AngelList, Tyke, like one of you also mentioned in the beginning. So yeah, I mean, my AngelList is one of the good portals, but the catch in AngelList is that you need to invest typically minimum of 3 lakhs to 5 lakhs per startup, which I believe is a very high amount, and it's a risk. So yeah, I think Melvin's raised a hand. Harman, you can take his question, and then we'll take it up subsequently after the slide.
Melvin, can you? Yeah. So sorry, Melvin. Could you please switch on your camera and unmute yourself? Melvin, can you please unmute yourself also? It seems like he isn't able to unmute himself. Melvin, if you have any question, you can just let us know in the chat box, and then we can pick it up.
Yeah, sure, Melvin. You can put your question in the chat, and we'll take that up. So yeah, just coming back to what I was talking, that AngelList, typically the investment amount in a single startup is 3 lakhs to 5 lakhs per investor, which is typically a very high amount and a lot of risk associated putting that amount in a very early stage startup. And Tyke, I mean, yeah, it's a fairly okay site, but yeah, no offense. Typically we see Tyke accepts lower investment amounts, but typically the companies that are rejected in Shark Tank, or like are not able to do that well, those get listed on Tyke. So I personally don't recommend Tyke too much. But yeah, AngelList is good, but it has very high investment amounts. So we'll also look further how we can minimize those amounts and still invest in these companies for regular middle class people like us. And yeah, going ahead, how to join, we can also look at joining these angel networks. There's a lot of angel networks like Indian Angel Network, Venture Catalysts, and then there is Mumbai Angels Network, Bits Angels Network. So these are some of the top angel networks. But yeah, again, you can join you have to provide a lot of documentation. In fact, even for AngelList, I think you need to provide a minimum salary proof, I think, of around 70-75 lakhs per annum for the last couple of years. Only then can you sign up as an independent investor on portals like AngelList. and likewise for some of these angel networks as well. So the trick is finding the right syndicate to join, who can give you access to all these good deals and get you great deal flows. Someone who gets access to a lot of startup invites himself or herself can actually open, do the initial research for you and share the best deals with you. And on top of that, of course, you can do your own research about them, and but at least the basic filtering has been done for you. So for example, if you are working or studying and you get access, you get 100 plus startup things in a week to see, would you have the time to go through all of those 100, or would you prefer that out of the 100 the best 3 or 4 are shared with you after filtering done, that these are the best and the cream amongst the lot? So yeah, I mean, I would personally prefer the second option, that someone else is doing the work for me and getting me the best deals, and I will further do my own evaluation based on the framework I just shared, and then decide whether to invest on it or not. That's always a choice, right? I mean, no one forces you to invest. It's totally optional, even if you are part of a syndicate, whether you want to invest or not. So yeah, going ahead. So what are the factors in choosing the perfect deal that we call, right? Perfect startup. How do we choose the perfect startup to invest in? So the number one point that, factor that one should keep in mind is the team. So, typically are investing in the founders more than the business. What is the founder's vision? What is their educational background? Like, are they from premier institutes, or even if they're from not so premier, say tier 2 institutes, but do they have the right entrepreneurial mindset and have past experience in leadership roles, or past startups that they have already founded? That is a very important criteria. And yeah, going to the next point, it's the experience or industry expertise. So yeah, whatever startup they're building, do they have expertise in that field, or are they newbies in that? Because that matters a lot, right? You can add a lot of value to your company and build it the right way if you have the experience, especially the industry expertise of that in that domain. And they should always be ready to hustle and have a never give up aptitude, that like, oh, aaj jada products nahi bike, like this week I didn't do much progress, and that's very trivial things to discuss. And like, they should always be ready.
There's some kind of, yeah, sorry, let's go ahead.
Yeah, it's all right. I mean, all of us are working in a virtual world, and this is pretty common. So yeah, I think it's fine. Yeah, the hustle or never give up attitude was what I was talking about, that founders should always be ready to put in more efforts, and like not give up at all. Like sometimes even in the fundraise, it happens that, oh, they are trying a lot to raise funds but could not raise funds. But you get typically feedback as well in that stage, that that this is the reason you didn't get funds, and you do this. So you take that feedback. Those are from industry experts that they're giving feedback. Take that feedback positively and work on it. And yeah, take that constructively, and then working on some of them will help you raise funds in the subsequent rounds. I think Melvin is raising his hands again. Herman, does he have a question in the chat?
Melvin has a simple question: how to valuate the startup की valuation कैसे पता करें?
Valuation typically has a bunch of different factors, like we discussed, Melvin, that like what stage they are at, like typically let me run back there. So yeah, this was what we were covering, that typical valuation depends on the seed, or like the stage of the funding life cycle, and it also depends to some extent on the revenue that they are seeing. So pre-seed and seed, pre-seed typically happens at sometimes zero revenue. In most cases, it's just in a conceptual and ideology phase, and this is the typical range during the pre-seed round. And during the seed round, it's a basic product is ready, MVP is ready, and they have either a beta product or a few early customers, EA we call that, early access customers. And in that, the typical valuation is this. So basically it's on the I'll not cover the entire thing again for the benefit of time, but yeah, like it's the valuation is typically decided based on the round of funding and what their revenue at that stage is. And there are always similar players in the market, so those are also analyzed while deciding the valuation. That
yeah. Rohan, one very important question, and I would like you to build upon it. Adit Pratik had asked, can I start investing in startups with rupees 1 lakh? Now, this question is also very important because all we who are joining here, maybe we have our own businesses, maybe we are, let's say, doing our jobs, right? So we might not have,
Right.
let's say, crores of capital to invest in, right? But
Correct.
whatever thousands or lakhs we have, can we do meaningful angel investing with that? Is it possible?
Yes. So I'm going to come to that. Good question, Adit. Basically, like during my like the syndicate that I run, like it's typically for the middle class, that the minimum investment amount in my syndicate starts from as low as 15,000. So I also understand that not everyone wants to invest lakhs of rupees. We all have our own things to take care of and like build as well. So we don't want to invest 3 lakhs to 5 lakhs of risk in just one company. Rather, instead of putting 3 lakhs in one company, say I would look to put 15,000 each in 20 different companies. And typically, even if one out of those 20 startups does well, right? Even if the other 19 startups go bust, still that one startup will get you more profits amongst all your investments, that all the losses would be recovered and still you will have large profits. Like we saw, right? 2100x. Those are, I mean, even if you get some of my startups are also that I invested in are 35x already in 1 year. So, like I'll share that during my portfolio that invested in a company about a year back, and in a period of a year, its valuation has gone up 35 times. So that's kind of players I look to identify. And yeah, that is a good question. Like we will look at investing smaller amounts starting from 15,000, and I can tell you how you can join me in investing such smaller amounts across multiple companies in the further part of the presentation. Cool. Any more questions at this stage, Herman, or should we go ahead and take questions later?
There was one question by Subecha, but you have already answered it. The question was, what is the minimum amount one can start investing in startups? You have said that, we can start with as low as rupees 15,000.
Right.
Inash had one question and then we can move forward. Mm-hmm. If someone has concentrated investments, say majorly amount stuck in own business or real estate, is it advisable to invest in startup considering risk involved?
Yeah, I mean, there is no, like, we look at minimizing the risks. I'll come to that as well in the further slides. But yeah, like, good question. Basically, there are own businesses. There is a risk in that also, right? But here you are investing 15,000 on a company, say, which has potential to grow 1000x. Imagine if that company grows 1000x and say the 15,000 becomes 1.5 CR or 15 lakhs even. That will you can utilize that money towards your business as well as towards your leisure holidays and stuff like that. So yeah, I mean, the minimum amount starts at 15,000, and if you make the right investments alongside a seasoned angel investor, you can look at minimizing the risk and maximizing the gains.
Yeah.
All right. Yeah, let's go ahead. So we covered the framework and the deal flow. Yeah, we started on how we choose the perfect deal to invest. So first was the team, basically on the founders, their expertise and prior experiences and educational background, and their good attitude, which should be always ready to hustle and never give up attitude. So yeah, we covered this. Now what's the next factor that one should look at? What is the market for that product, right? Like, I mean, is there really a need for that product, or like, will it solve any purpose for the target audience, or is it just something that temporary, that people will use it for a one-time offer and then get rid of it the next time they don't see anything? So yeah, we need to identify how big is the opportunity for that startup, and how is it growing. Typically we see TAM versus SAM ratio, and market size of that as well, market size of the what the startup is targeting, and evaluate based on that whether it's a huge market that it's going to target, or chota mota like penny audience hai, ya is it looking at targeting a really big customer base. So typically, like, we should look at identifying startups which are having a large target audience and targeting a considerable portion of the market. And yeah, also look at how quickly is the market expanding for that. Basically, like, is it going up and down and uncertain, or it's continuously expanding, or it's going down multiple times. Is it market dependent, or is it need? If something is useful to the customer, it will always expand, right? For example, food. You take a startup like Swiggy or Zomato, you will always require food, right? I mean, I don't think anyone here would be able to survive without food for a long period of time. Maybe some of you might be doing Navratri fasting and all, but or even Muslims might be doing rozas and all, but food is something we all need, right? And that market is going on growing, and what the population of India is, and that's a market that is always continuously growing. So that's just an example how you can choose, I mean, a startup where the market is constantly expanding. Yeah, let's keep it interactive and have a small poll now. Basically, uh, amongst you all, like which are the tech sectors that you feel will become the next big sector? One is fintech, which is already big, and we have a lot of startups like we discussed, Zerodha, Cred, Razorpay. Then there is Web 3.0, which is the upcoming, latest technology, and Web 3.0, crypto, blockchain are things we hear a lot. And then there is D2C, direct to customer e-commerce, which is again like very much in the news now after Shark Tank. A lot of such companies raised funds. And yeah, SaaS enterprises are always there, like software as a service companies, which are B2B and uh, targeting enterprise customers. So would request you guys to comment ABCD or the words themselves in the chat window, and we'll take a quick poll on what do you guys think is the next big sector.
Yeah. So if I have to tell you, Avinash says fintech, Manoj says Web3, Sunil again fintech, Naveen is G2C e-commerce, Prasann says insurance tech, and Subecha believes fintech as well as Web3 3.0 both have the capability. Satya Bharat sir says fintech or D2C e-commerce, Web 3.0, D2C e-commerce, SaaS, agri-tech. Okay. Tirupati Web 3.0, Web 3.0, insurance tech, Web 3.0 and SaaS, then again SaaS, Web 3. Okay, an interesting answer by Ravi Kumar. He says fintech followed by D2C e-commerce, followed by SaaS, and followed by Web 3.0. So he believes all the four would be, growing sectors in the coming time.
Completely agree with him. I mean, all of them, not necessarily on the order, but yes, all of them have a big, growth path, and that's why that was the reason for listing these. But yeah, I'm happy that folks have also commented their own, like insurance tech and all, because yes, it's always good to share what you feel like. And yeah, that is also a very good growing market, like insurance tech. We have companies like Acco and all, which have made a big mark. So yeah, that's also a very good point.
Yeah.
So any more answers you want to discuss, or we'll go ahead, Raman?
Yeah. So yeah, Adit again believes, AI. Anij says all four. Then there's someone also saying all four. Siddharth, fintech, edtech, Web 3.0, SaaS. Right. So I think everyone believes that all of these sectors actually have a potential to grow and become the next big thing.
Sure. Thank you everyone for your responses, and yeah, feels good to have some interaction during the session to keep it lively. And yeah, I'm happy that all of you agree that these are the next big sectors, and happy to get all your views. Now, we were focusing on how to choose the best or perfect deal to invest in, right? We looked at the market and the founding team. Now, next big thing is what is their MVP or the early traction? Basically, like when they are looking to raise funds, do they have a minimum viable product, or they have at least some sort of traction on their product to showcase to the investors? That is typically what the investors look for from the seed stage. And basically, how is their product market fit aligning, and things like that. Is the prototype interesting enough? So they typically have to give a demo of their product in this stage, and showcase that how it's a differentiator or how it's adding value to the customers. And that is what is evaluated at this stage. And also we look at whether the startup is getting revenue or at least users. So if it's an app based startup, like say free charge or something, like how is are the app installs at least increasing significantly? And revenue as well, like what is the revenue, how often are say people doing charges or paying bills on it, just for an example. But yeah, like these are some of the major factors that we look at evaluating while choosing the right deal to invest. The next factor now, like what they're asking for funding, is the valuation or the amount of funding that they're asking justified? So now, is it in line? We covered the pre-seed, seed to series A, B, and further stages right up till public. And is the ask in line with their company stage? So whether the amount they're asking is valid for their stage. If they're asking say $50 million at a pre-seed stage, no one is going to give them that money, right? It just shows that they're just looking for money and not really having a vision to build a product. So yeah, basically these are some of the things that whether the ask for the funding or the valuation justified. And then what's the future roadmap using the funding? So how do they plan to utilize their funds? Is it to grow the marketing and sales teams, or is it to build more on the tech, or like reach out to prospective customers and things like that? So it should be ideally a fine balance amongst all of these, and that is something that should be presented and told to the investors, that what is the future roadmap that they have in mind for using the funding. And at times they will be corrected as well by the investors, that based on their experience, like investors are typically seasoned folks, and they have seen this from across multiple companies and can advise the startup that focus on this specific thing or that specific thing more to get a bigger target audience.
Yeah. And one very important question, Rohan,
customers, etc.
I just had a question, Rohan. There seems to be some kind of network issue from my side.
Question in a bit, like once your network is figured out.
Yeah.
Saw during that graph, right, that the valuation is typically ranges are shown for each stage of the fundraise. So like if it's given at a very high valuation compared to that, मतलब अगर valuation ही इतना ज़्यादा है कि next stage में there is no possibility of having enough room for growth. Like at some point you'll hit a break point where investors will not be willing to put funds at a very high valuation. So you need to build a right balance, that what valuation to have, so that there is enough room for growth in the subsequent rounds as well, and company keeps growing logically, rather than say एक बार very high valuation पे fundraise कर लिया and then they have to raise their next round of funding at the same valuation. Then that is a really bad thing to do, because it shows that your company is not growing. So you should ideally not just look at targeting one round of funding, but how to grow the company in a phased manner, so that at the end of the day, it's a long term which matters for the company and not just a short term one time fundraise. Yeah, Harman, you had a question, or is your network sorted?
No. Other question that I had, you had already answered it.
Okay, the valuation bit.
Yeah.
Okay, great. I think I could read your mind. All right. So Harman mentioned that we'll also be having contests, right? So be ready, folks. This is the first question, and which of the following funding based on our discussion seems reasonable to you? Whether it's idea stage at 30 million valuation, prototype ready but no traction at $5 million valuation, or an annual run rate of $500K at $4 million valuation. So there's a poll which is sent out, and I hope you guys respond fast to it. Like we'll also look at fast responses versus the number of correct answers as well. So first thing is the number of correct answers, and next is how fast you have answered. So go for it. Even if you're not sure, just tap on something that you think might be correct. It's not that we are going to penalize you or anything.
Yeah. And guys, no answers in the chat would be considered. So I have launched a poll. You have to select the right answer in the poll, right?
Yes.
Wait for another 5 seconds, 10 seconds. And then, we can move forward. Okay, guys, anyone who's left, you can just quickly, tap the right answer in the poll. The question is very simple. And the last slide we discussed about, what is the right or reasonable ask, right? When you're evaluating a startup. So in this in these three options, you have to find what is the most reasonable ask, right? And as an investor, where you would be more comfortable investing in. A company which only has an idea but is valued at 30 million, or a company which has a prototype. It means they haven't sold their product as of now, but they have something to show, right? And it is valued at 5 million. Or a company who has had a prototype, they've already done sales of, they've already had a annual run rate of $500,000, and they're asking for a $4 million dollar valuation. What do you think is the most, let's say, is the best bet for you as an angel investor? So let me just share the results. So Rohan, here are the results.
Yeah, I think a lot of folks have been paying attention to the slides. I'm happy about that. Like 63% of them have actually got it right. That ARR of $500K at $4 million valuation is what 63% of the answers have come. And yeah, 30% have said prototype ready but no traction. So this is also fair, but C was the more apt option. It's not like B is wrong, but amongst the two, C is the more apt option. B is also fair. But yeah, like the A option, some of you have answered as idea stage at 30 million valuation. That is not something. Maybe those folks were on calls during our session and, like not paying too much attention. But yeah, like it's totally okay. I mean, just pay a little more attention, and you guys, I'm sure, are having some work. That's why you couldn't. But yeah, let's go ahead. I mean, it shows that most of you are, paying attention. 93% have answered B and C, which is a significant chunk of the audience, and happy to know that you guys are gaining something from the session. And also not just knowledge that you're gaining, but also participating in the quiz contest, which will win you prizes. All right, let's go ahead. So how do we manage a risk in investing in a startup, right? I mean, we know that it is a risky thing, and it's like we discussed, high risk, high returns form of investing. Now, to manage that risk, we should only invest funds that we are okay to park for a long period of time, typically more than 3 years. So you cannot, like at any time say, oh, mujhe ye paise chahiye, mujhe nikalne hai. It's not like a bank deposit that you can easily break. It typically happens in a phased manner when companies raising further rounds of funding and, or getting acquired or going public is when you can get the maximum out of that. So yeah, it's only invest money that you're okay to park, like you have invested in your typical savings and say FD or other forms like gold or real estate or whatever you guys invest in. I mean, that varies from individual to individual, but yeah, invest the money that you're okay to park for some period of time. And then how we again look at managing and minimizing the risk is diversify with small amounts in large number of startups. So again, like I mentioned, right, rather than putting 3 lakhs in one company, you put 15K in 20 different companies. That gives you a very big diversification, and it's a sure shot thing that at least few out of those 20 will definitely click if you have invested with the right seasoned angel investor who can guide you with the same. And yeah, the final point is again on similar lines, that you should get the expert help by associating with the right angel network or syndicate. And yeah, those, they'll help filter and bring the best deals to you for investing, and do major 90% of your research. And the final 10%, of course, you should do your own cadence and research, that how the companies and how their revenue numbers are, and who is the founding team, the things that we covered, right? The founding team, the go-to market, and the revenue traction, etc. So those are the other things that you should also look at evaluating on your own.
Yeah.
So yeah, now how do these syndicates and angel networks help you, right? I mean, they help grow your professional community, and you can network with founders and other investors. So it's not that you'll just be discussing angel networking with them. So most of you here are in a corporate job or are in business. So, like you also can reach out to these people for referrals in companies. They have access to a lot of company network. And also likewise for folks in business, you can, lot of business synergies and opportunities can open out from these networks. So that's how you can grow your professional community at a very bare, like spending very less time on it. And you get access to regular deal flow of early stage startups and direct access to pitches. So basically what we mean by pitch is a founder of a company comes and talks to you and explains about his product. And that we'll also have say 1 or 2 founders in this call itself after this to give you an idea about the kind of startups I invest in. And to give you a proof of concept, I've also requested a founder to directly showcase their product. I mean, talk about their product to you later part of this call. So yeah, we'll also cover that. And yeah, get regular deal flow. We covered that. And then the final option, point here I would say is getting expert guidance from the experienced and seasoned investors, so that you can co-invest with big VCs. For example, if a syndicate lead, like an investor who is a part of investing alongside say SoftBank, Sequoia, Tiger Global, Matrix, and Kalari Capital, some of the popular ones. So you can get expert guidance from folks associated with this, because their network is really strong, and they'll bring you the best deals, filtered deals to invest in, and you'll also get guidance from them, and you can co-invest alongside them. So that opens up a lot of options for you for investing. So this is how multifold value can be added via syndicates and angel networks. So yeah, I'll just quickly pause for a minute here and check if we have any questions related to how syndicates, angel networks can help.
Yeah. So Subecha has he's saying he has two questions. Subecha, can you please let us know in the questions in the chat? Okay, so the first question by Subecha is, from your personal experience, what all other risk factors apart from general ones, we know are there while investing in startups, let's say?
So yeah, I mean, so which are the different risk factors like we mentioned, right? Like we should evaluate the different things like the founding team, their market. The market is also a big thing, that what is the target audience and what growth paths do they have in mind, and also whether their valuation is in line and fundraise is in line with what typically their stage matches. So these are again some of the factors that we evaluate. And also another thing we can evaluate is the competition. So are there too many players already in that field? For example, you take wallet payments. Now we have Paytm, we have PhonePe, we have Google Pay, we have Amazon Pay. Now another person, we have Freecharge and things like that as well. Now if another person comes and tries to build a similar exact same product, I don't think they'll stand a very big chance to compete with so many competitors, right? Unless they really add a differentiator offering on top of that. So yeah, like that's how like you can evaluate the different risks.
Yeah. And the follow-on question by Subecha was, you answered it partially though, that how do all the investors and VCs manage to strategize around these high risk deals?
Right. So typically, like, I mean, the big VCs, right, they are having a lot of seasoned investors who have 15, 20 years of experience, and they have learned it the hard way. Like they have invested in a lot of companies at an early stage, and some of them have given big returns, some of them have not really. But yeah, like they have taken all those learnings, and now for a reason they are called VCs, right? Big VCs, because say how did they become VCs, right? Big VCs, they also started small like us and maybe slightly above us, but they invested in the right amounts, right, good amounts of money in the right startups, and that's how their capital kept growing, and over a long time now they are called big VCs. But they, trust me, started as small VCs themselves, and they have over time grown into that big by making the perfect choices on investing in the right startups.
Yeah. Rohan, there are a lot of questions coming on syndicates, right? One question by, Sridhar is, how do we get access to syndicates and how do you identify a good syndicate? Now, I know you also have your own syndicate, right? So the follow-on question that I wanted to ask was, what actually makes a syndicate a good syndicate?
Sure. Great question, Arman, and whoever asked that as well. That basically a good syndicate, like I mentioned, is a syndicate who is associated with multiple different VCs. So just, I'm not talking more about praising myself or anything, but I am part of 30 different VC syndicates where I invest alongside SoftBank, Sequoia, Tiger Global, Matrix, to name a few, and 30 such big VCs. And the more VCs that an investor is associated with, the more deal access you get. And the more deal access you get, the more filtering is done before sharing those deals with you, right? So typically, say the smaller VCs, right, they don't get access to great deals, and they share any deal that they get with you because they are going to raise money and show that, okay, we are raising funds, so we'll get a commission from that. But that's not how it should be, right? People are putting their hard-earned money into it, and there is a risk associated with it. So you should ideally look at identifying who can get you access to a lot of good deals, and also filter them and share the best ones with you, so that you can like invest, and at the same time look at how you can minimize the investment amount and diversify your portfolio. So you don't want to be going on portals and investing 3 lakhs or 5 lakhs in one company. Rather invest across different 15 to 20 companies the same amount, but invest it, diversify. One of them clicks, you are at you invested 3 lakhs, say 15,000 each in 20 companies, 19 of them totally shut down. That doesn't typically happen. I mean, my ratio typically like 75 to 80% of the companies I have invested in are in the positive and doing really well, and the rest, none of them have shut, but some of them like are at say 4% or 5% losses. I'll also show that portfolio of mine to you. Yeah, I think that this is a good time since there are a lot of syndicate related questions. I'll also showcase my portfolio. But yeah, I request you to keep this confidential and not share it with everyone. But yeah, folks who would like to join my syndicate, I'll be happy to share it with you as well. So yeah, this is approximate portfolio that overall I've invested around 30K USD, and the overall value of it is at 62.6. Is my screen visible, Herman?
Yeah, it's visible.
All right. So overall, the 30K dollars is currently at 62.68K. So overall, there's been a 109.9% increase, and 2.08x times the money has grown. And this is just the overall, the average of everything. If I take specific examples, so this is a Singapore-based fintech startup that I was talking about that I invested in September 2020 at a $15 million cap. And later on, they also raised at $200 million cap in October 2021. And currently they are at $500 million valuation, and the round is led by Tiger Global. So Tiger Global, now the big VC came on in at a later stage saying that, oh, the company is growing. And if you had identified it at the right stage, now you just do the math. It's 500 by 15, right? So the company has grown 34x times in just a period of September 2020 to October 2021. So 1 year, what I'm talking about, the company has grown 35x times, not 35% here, 35 times the amount invested. So had you invested, say, a lakh, or it would have been 35 lakhs in a year. So that, I believe, is a great, way to identify the right startup and invest, which can give you massive returns. And yeah, also these are some of the companies that I've invested in. So for example, some of them are at the same valuation. The worst case that I have seen is like there is a 4% decline that I invested 1,000 USD and it's at a 0.96, like a 4% decline. But also there is a Indian fintech startup called Rupify, where I invested 3 lakhs in their seed round in the early 2020. And it's currently, the value of that is 16.3. So there is a 5.43x again growth in a period of 1.5 years. So these are some of the just few to give you an example on the kind of deals I invest in, and any good syndicate ideally should be investing in. So yeah.
So guys, I just one question I had from you, Rohan. So suppose there would be students who would want to join your syndicates also, who might be sitting in today's class, right? So of course, there would be a set process for that also. But first of all, I just wanted to know how many of the participants would be interested into, let's say, joining the syndicate with Rohan and then investing alongside with him. I just had a contact pool. So if you could just help me out and fill this up, right? So this way we get a fair idea how many participants are actually interested to be part of, syndicate with Rohan. Right? And
and I'll filter and bring out the best deals to you, like 1% of the deals that I get, because I filter out 99% and believe that not every startup will go up, right? I mean, only few will. So yeah, I will do the 90% of the work for that.
So I would request everyone who's interested or who even wants to just give a try, you can, there's a contact pool that I have shared with everyone. So you can just quickly go and fill it up. So till the time, Rohan, everyone is actually filling up the poll, I would ask a couple of questions, right?
Sure.
One question was by Ravi Kumar Rajgopal. So the question was, let's say, suppose if I'm an investor, can I sell my shares at any stage?
Yeah, nice question, Ravi. So basically, like I mentioned, you should only invest funds that you're okay to park for a long period of time, because individuals can't themselves decide this. It's typically decided by the syndicate lead that when you can exit from the company, and syndicate lead is the right person to do that also. So you don't want to say, suppose I've just showed you, right, Rupify is at 5.43x. Now I'm not exiting at that point because I know it will grow further. So I know the returns will be much more massive going forward. So you think that, oh, I've earned 13 lakhs and, let me withdraw it. But that is not the right thing. The exit is controlled by the syndicate lead, who is a seasoned investor, and all the money through his syndicated is invested as one pool alongside a bigger VC. So the exit is typically decided by the bigger VC or the syndicate lead sometimes, based on their expertise in that field and domain. And, they are in regular touch with the company founders, and they get updates about the revenue, etc., and how the company is performing. So they are I believe, in the best place to make that decision. And yeah, typically, like general life cycle is at least 3+ years. ready to park your money. It sometimes is longer as well. For example, had you invested in Flipkart in 2011 or 12, you would not have withdrawn that money till now, because it's going on growing. And, you know, like maybe a lakh, I mean, not, let's not take a lakh. Maybe if you had invested 10,000 at that stage, it would have been close to a crore or something right now. So yeah, basically that is, I think, greater than a crore as well. We saw Flipkart has also gone 6,000x, right? So yeah, it's not just a crore, greater than that.
Yeah.
So yeah, basically, to answer in short, Ravi, your question, basically, no, you cannot on your own decide that. You can give a request to the syndicate lead, but actually he cannot individual contributions, he cannot withdraw. It's the company, complete syndicate who has invested alongside him, that either that can be withdrawn or not. So if majority of the folks are saying withdraw, then he can consider and do that. If not, then based on their expertise, they will help you get the maximum returns. So that is how the whole angel syndicate works.
Yeah. And I just had a follow-on question. Now, for all the participants, let's say, who would be, joining your syndicate, I know there would be a fees also, right? But more importantly, can they expect around 8 to 10 deals each month? I mean, there would be a lot more deals, but 8 to 10 good deals each month?
Yes, definitely. I mean, I spend a lot of time doing that. I'm into venture capital and I'm associated with 30 different top VCs. So I spend a lot of my time just investing in the right place and finding the best deals to invest in and share that with my network. And it's a very nominal fee that one-time fee that too, which I charge. So yeah, we'll see that as well in the future slide.
Yeah. And guys, in case anyone is left to fill the form, so you can just let me know in the chat box. You can just type in your contact details. If in case someone is left, right, you can personally message me, and then we can do the needed, proceed with the needful. Okay, great, great. So Rohan, let's move forward.
All right, sure. So basically now what we'll cover further, now that we have looked at various factors on how to evaluate the right startup and how to look at associating with the right syndicate and investors. Now I'm also conducting a startup investing boot camp, as well as offering people a chance to be part of my syndicate. So in the boot camp, I'll be spending 3 days training live about startup investing, how it is to be done, and classes for the same, followed by 4 days of, or maybe mix of the two so that it's more lively. I'll have live founder pitches of active deals. Like I will have founders from companies or myself talk about the company pitches and have some of the best cream startups presenting to you during the workshop. And then you can decide on the quality of deals that are part of my syndicate. And also a 1-year membership alongside that, which will be like a complimentary to folks who are attending the startup investing bootcamp. So yeah.
Perfect.
So guys, go ahead. Yeah, I'll let Herman talk about this.
Yeah. So let me just quickly, share the details of the bootcamp, right? So as Rohan said, so this would be a 7 days bootcamp. So the dates of the bootcamp would be, 9th of, it's written June, but it would start from 9th of July onwards, right? So this is a typing error. So 9th of July onwards to 19th of July, we'll be having a bootcamp. So the first 3 classes will actually be, learning more about how to evaluate the deals and what are the different parameters one should be looking in founders and then startups, right? How to evaluate the numbers. Once we are thorough with it, then Rohan would be, asking different founders or pitching different companies to you that might have come in the cohort of that month. So once you join the syndicate, what would happen is each and every month you would be part of 8 to 10, startup deals, right? Wherein you would be sitting in the, session. Founders would be coming themselves, or they would be Rohan himself, would be telling you about shortlisted deals wherein you can invest in, right? So this would be, a benefit of joining the bootcamp as well as, the syndicate. The price of the syndicate or the bootcamp, you could say, is rupees 15,000. During this masterclass, all the people who, join the syndicate as well as the bootcamp, they get it at a combined fees of rupees 9999. So there is a 33% discount going on. Plus, additionally, for the first 20 enrollments, we'll be giving 3 ebooks worth of rupees 3,000, which ebooks, you can. Yeah.
All right. Yeah, we'll spend the last couple of minutes, I think, here, and then as part of like having you guys build faith in the kind of startups I invest in. I've also requested one of the startup founders, Harshit is here, Harshit Mittal from Supply Note. So I'll also give him an opportunity to talk about his startup and present to you the kind of startups we are raising funds for and investing in.
Yeah.
So yeah, anyone wants to sign up, like the link is in the chat. Just quickly do so, and then we'll move on to Harshit pitching about his company.
Yeah. So I just wanted to clarify. Some people had asked about the exit load. So I just wanted to clarify. There is no exit load as per such, right? But it's only that 12% of the profits would actually be shared, right? And that is a very minuscule amount, right?
Correct.
Just sharing the link once again. You guys can quickly go and register yourself. And coming up ahead, we have Harshit from Supply Note, who would be telling us, about his own journey and about his own startup, right? And then whatever you have learned today, I would request you to, apply all those, principles, and then, be an investor in an investor seat for yourself.
All right. So thanks, Arman, for that. And I think, I'll stop sharing my screen now. The link is still very much present in the chat for folks who want to sign up and, be part of my syndicate and get access to some great deals, which I personally filter and share. And over to Harshit now for, talking about his startup Supply Note, which has been doing really well, and some company that I really believe in, and I'm getting tremendous response raising funds for them as well. So I'll let him talk about his company to you as part of our Founder Connect program, where you can directly, speak to a founder and ask any questions, and also learn about the quality of deals I invest in. So over to you, Harshit. I'm stopping my screen share. You can, if you want to talk or share your screen, up to you.
Sure. First of all, thank you so much, Rohan, for inviting me to the session. It's been some time that I have known you, but it's always nice to hear you share your learnings. And I was not able to completely attend the session, but some of the parts I was really able to resonate, because as startup founders also, we personally work with startups and invest in our own capacity as angels. So some of the philosophies I really resonated with. Cool. So good afternoon, everyone. I am Harshit. I'm one of the co-founders at Supply Note. So I head technology and product and at Supply Note, and we are building the next future of F&B supply chain. I met my co-founders in IIT Kanpur in college back in 2015. And that's how we started our own entrepreneurial journey. Again, we started with a different idea. We pivoted multiple times. But today, what we are doing, that I'll share with you, I think we have been validated by everybody from the industry, and customer loves the product. So that's a validation of what we are doing now, which we feel is right, compared to what we started with. So I'll just share my screen and walk you through a small presentation. So question and answer, Rohan, you want me to take it at the end, or should I?
Yes. I think we'll love to hear about your product first, and then maybe if folks have questions.
Okay, sure.
A brief description also sounds good.
Yes, sounds good. So you can see my screen, right?
Yeah.
Okay. So what we are doing at Supply Note is we are providing supply chain automation tool to F&B businesses. Now we have been talking about how food is a necessity, and we as consumers have changed our eating behavior. If you look at the past 10 years, right? So all of us, we order food online, be it tier 1, tier 2 cities, be it once a week, but we do, right? And who are the people that are providing? That's the food service industry, which is your F&B businesses. Now, if I talk about the opportunity, so globally, it's an $8 trillion industry. In India itself, it's $60 billion industry. Some of the players, if you have heard of it, Uber Eats came into India. Swiggy, Zomato being, one of the top players that are known for food primarily. So the industry is huge, and it's been there for almost centuries, because food again traces us back to our beginnings itself. Now, if I talk about food industry in India, So, it's growing at a really good CAGR. Of course, in India, we have a different split. So it's 8% enterprise and, 92% standalone, which is very different if you look at the more developed nation, where our economy is also going. So we also eventually see that we'll have more chain restaurants and maybe lesser standalone. But seeing that we have cultural differences and, we being one of the populated countries, so we are bound to have that split, tilting towards a standalone, but we are still forecasting that, there'll be more and more chain restaurants that are going to come. And we are seeing that if you guys are studying it closely. So 7 million organized restaurants are there, out of which only 10% use POS software. And there are about 400,000 restaurants listed on food aggregators. So by food aggregators, I mean Swiggy and Zomato. So this is the actual net margin of Horeca industry, Horeca businesses, India and globally. So there's just primary stats around the industry that we are talking about. Now, if you look at the market landscape, so we are well familiar with Zomato, Swiggy, Dine. So they solve the restaurant discovery problem, where you and I, we consumer, we find restaurants through their platform. Now, to run a restaurant, you will often see there's a billing software that cashier would use, and also sometimes on the back end there could be a software. So these are one of the, some of the players that have been in this space for about 10 odd years, and namely POS's LimeTray, Pet Puja. Pet Puja was invested by Udaan, if and just to give you some background. So this is the back end and front end of restaurant. Now, if you look at the back end, then to talk to the local suppliers or to procure their items, they're still doing everything offline, which is on call, on messages, or on emails. Now, what are the current challenges in F&B? So everybody wants to open restaurant or like the idea of opening restaurant, but running a restaurant is very, very hard. They don't enjoy those margins that we assume they do, because they're struggling with these problems. So if I talk about standalones, they are buying items at a very high cost, right? Because they might not be having suppliers of every item locally, as well as the suppliers charge them high prices because of low visibility. They might not know what is the standard price for a particular item. Then there's high pilferage and theft, because nothing is digitized. Things are still happening on pen and paper. And there are wastage and stock out. That is why often our orders also get cancelled when we are placing orders online or when we are visiting a restaurant. Now, for enterprise, because they want to think growth, they want to grow outlets quickly. Now, the cost of infrastructure is very high for them. Opening an outlet again, that if you're having multiple outlets in a city, you'd want a warehouse also to distribute raw material to these outlets. Cost of management is very high. You have to hire many people to be able to run smooth operations. And then you have no data visibility on what should be the next step. Where should you be saving money? Where should you be opening new outlets? So these are some of the things that restaurants today struggle with. And that leads to about 70% leakage in profit margin. So this is the problem that we want to solve. Other than that, this is one of our moonshot as well. So food, we are in middle of food wastage crisis. We, of course, food industry is always known to, to suffer from food wastage because, there's no proper planning. Sometimes, there's over ordering, under ordering. So this is something which is happening globally. And this is one of our vision that we want to solve or at least contribute to, which is the food wastage price, which is by optimizing supply chain and, better prediction algorithms so that businesses, even small businesses, can procure at the right quantity. Now, what is the world that we are imagining? So we are imagining a smart supply chain where supply node empowers front end, back end, as well as your supplier communication. So your business front, your kitchen, your inventory will be run on supply node SaaS, which is your software product. We were talking about B2B SaaS, and now supply chain tech, fintech, e-commerce, and B2B SaaS could be the next big thing. We do all four of them. Right. So B2B SaaS is one of our flagship products that is very relevant for restaurants that want to grow. Now, if you want to buy from a new supplier because you don't think your prices are good with the local suppliers, you can come to the marketplace and you can place an order. Similarly, you can get your order delivered to our own warehouses where we can do the shipments. So not only we provide technology, but we also do on-ground operation, which is something that sets you unique in Indian market and give you a lot of defensibility. So this is the supplier node solution. So we provide a point of sale system, which is to manage their front end. A combination of point of sale and inventory management. Also, your entire warehousing, your kitchen can automate their ordering and not worry about what should be the inventory that they should order the next day. The system automates the entire process and tell them that this is the item which is being consumed very fast, because we sync the sales orders, which is the Swiggy Zomato order, into our system, and we analyze what is the recipe consumption that is happening for every item. Then we have marketplace. This is what I was talking about, where if you see B2B marketplace have been in fashion, in the sense everybody's investing in it, because at the end of the day, this is how the economy is going to grow, where suppliers have more geographies to cater and buyers can get items at a lower prices. And then we do something which is a fulfillment center. Now, this is something unique and very operation intensive. We have been in business for 7 years. I didn't cover that. So we have actually tried many models, and this is something that we have the capability. Even when we come from a strong technical background of IIT Kanpur, we still feel that after running business for 7 years, we really understand this business to be able to execute on ground operation as well. Now, what is our delta? So what do we do for our F&B business, and how do we help them? So we, for an enterprise, if I talk about we and also the standalone, so bottom line is your profit making thing, right? So that's where we help them in pilferage, theft, where their offline process is there. Then whatever food wastage is happening, this is where we contribute, and also the overpriced purchase. Now, when you're using supply node, these are the some of the numbers that we have proven with the brands that we have worked with. So that leads to about 70% increase in profit margins. That is one of the reasons why restaurants get onboarded very quickly, and we tend to validate the data post their operations. Now, what is our monetization? How do we make money? Now, we are not in a business of using VC capital to just use growth. We have been running business profitably for many quarters in the past 7 years. But right now we're seeking capital, of course, to do this at a very fast rate. But we have a very strong revenue models, which is fourfold. So we charge $299 US for SaaS subscription. These numbers are for Indian context as well. So we have customers outside India also, where we charge a bit higher prices, because the market is accepting towards that. And on the marketplace fee, so we charge a typical 8% to suppliers. That's like an Amazon B2B pricing model, so that's well accepted. On the fulfillment, whatever inventory movement that we are doing, so out of that we charge 8%. And the fintech part is that we charge 1% on the working capital loan. So if you want to open a new outlet, you can do that using our fintech service. So this is our competitive landscape. So I mean, I'll not spend too much time on it, but just so that you can see, Hyperpure by Zomato is something that Zomato claims to as one of their revenue model, which is nothing but our marketplace in some way. Of course, Zomato is doing inventory like, where they're storing inventory in their own warehouses. We do in a asset light model, which is letting suppliers place order. But because we have the strong fulfillment capabilities, we are able to deliver that and not just provide a tech platform. Now, these are again some of the players that have been in one category, which is like veggies or fruits, or very Metro will only provide you with non-perishable items, while Hyperpure will focus on the vegetables and perishable items. While these are your only software companies, .pay, if you have heard of, that's again at many restaurants that you see. These are all the tech solutions, but SupplyNote is well positioned in terms of both software and operations capability. These are our customers that we are very happy to service. Some of the customers you have already had an experience of having the dishes. All of them are using different products. Some of them are using everything. So for example, Whataburger uses all the 4 modules that we have, and they're completely dependent on the business that we do. So let's say tomorrow SupplyNote disappears, they don't have a single solution that they can replace with. Again, Naturals Ice Cream is one of our top customers. with about 250, 300 outlets on the platform, and they are managing their billing through us. Biryani by Kilo has all the outlets completing the backend. So these are some of the brands and validation that we are right for the space, and that that we should now think through. Now, on the partners level, we have integration with everyone because it's a combination of ERP as an integration heavy business. So we have integrated with everything and every player that we know. Of course, we constantly add integration every week. And sometimes we as founders are also outdated on what is integrated. So this is our growth story. This is where we stand today. So we have about 2,500 outlets. We are spread across 73 cities. The countries we have not mentioned here, but I think we are at least in 5 countries right now. We have about 2,700 suppliers serving to the restaurants, and we have about 110 employees now. So in the last 2 quarters, we have been adding more functions to service the restaurants, and that's how the team size have grown. On the GTV is your gross transaction value. This is the transaction that we empower through the platform. So that's about 42 million annualized, and 4 million annualized is the GMV. The net revenue, the annualized revenue that we do is 1.5 million. So this is the growth trajectory. Of course, we were one of the businesses that stood in the COVID times. So of course, you might see a small dip here. But if you see, we quickly picked it up because the industry isn't going anywhere, be it COVID, non-COVID. And these are some of the tests that very few companies are able to stand, and investors and VC see that. So for us, we were very focused on growth, and we have been able to achieve our numbers, what we projected. Of course, we have higher targets now, and that's why the capital seek is there. So these are our projections where we want to grow. In terms of customers, in terms of revenue, and in terms of GTV. So GTV is our North Star metric. This is what we track. This is about the founding team. So we are all graduates from IIT Kanpur. These are my other 3 co-founders. All of us come from different backgrounds, different experiences. So I come from a city, Rajasthan, there's Kota. So that's how all of us come from different geographies, but we have been building this business for 7 years, and we have together for 10 years now. And these are some of the funds that we have raised money from. You might have heard of them. If not, these are one of the top backers, and they're very helpful in growing the business. So we have got good suggestions. So this is the ask right now, and so we are raising about 8 million. Out of which 6 million we are raising in equity and 2 million in debt. Out of 6 million, 5 million is already committed, and it's closed. So only 1 million is left in the round. These are some of our advisors and people who are helping us navigate through big accounts and how we can grow very fast. So Yukesh Bilani is again an ex-MD and CEO of Del Monte. So we have contracts in Singapore of about $500K, that's he's helping with. Then we have plans to expand internationally in both not just software, but as well as on the fulfillment capabilities. So we have some of the industry veterans help us grow the business, and we have got them on our advisory board so that they have common interest. So this is the overall history where we started with. So in 2015, we were born, then we launched Add Your Cup. So we did what Zomato Hyperpure was doing in 2016. So almost 6 years ago, we were doing the inventory-led sales, and we launched India's first marketplace for F&B businesses. That was inventory-led, and this is what we are doing now in 2022 after all the learnings and after all the things that we have seen. And SaaS is something that we launched in 2019. So it's a 2-year-old product. It's very mature now to where we started. And this is the full stack solution offering that we have got in 2021 after we acquired one of the companies. So it was a billing software that we acquired in October 2021. And now we have everything from front end to back end, and all we need to integrate is the Swiggy Zomatos of the world, not just in India. So total capital we have raised is 2.6 million. We are headquartered in Noida, Sector 2. So these are, probably I'll leave that for now. But there's a quick background and summary about the business. Any questions that you guys have, I'll be happy to take. Also, would be happy to know if anyone of you runs a restaurant or aspire to become a restaurateur. I would love to talk more, maybe separately, or if you guys want to talk now, would be eager to hear your thoughts.
Yes, for sure. Folks who are from restaurant background or have any interest in that, please drop your questions in the chat, or like, thanks a lot, Harshit, for pitching your startup. And I think Supply Note is a great new product which will has the potential to become the next big food-based startup out of India. And yeah, like he was talking about, he's from Kota. That Kota is known as IIT factory. So yeah, there are a bunch of wonderful IIT grads, and coming up with a great product. And I'm also helping raise funds for them. So yeah, if you would want to get access to invest in their deal, you can always reach out to me and be part of my syndicate. And Harman has been sharing, I think, the links to join the syndicate. So feel free to register and invest in the next big company that Supply Note and team is going to create. And yeah, you'll get access to a lot of such wonderful deals, and also get to say maybe attend some of their pitch decks as well, like how we had Harshit speak today. And it's been truly impressive, Harshit, the growth path of Supply Note. And yeah, I'm looking forward to investing more in and getting more investors on board to invest in you.
Sure, thanks.
I'll also share my LinkedIn profile for folks who would want to connect and know more about anything in the chat, and request Harshit also to do so that anyone who wants to reach out can.
Sure. So I think there's some question in the chat. Do you want me to pick it up?
Yeah, sure.
Now? Okay.
Harman can filter.
Yeah.
Yeah.
Harman,
so
please
the
do
question, yeah, hi. So the question was by Satya. Satya's question was how the credit facility works for buyers and they have a return policy.
Yes. So what we do is that we work with NBFC's partners. So in fact, we were one of the first partners of Indifi, PinCap, when they wanted to enter F&B state, F&B businesses, because F&B businesses are known to be very notorious. They don't want to track the, keep their data, or show their sales in terms of saving taxes. So it was very hard for these NBFCs to lend to F&B businesses while there was a possibility of capital deployment. So what we did and how we help is that we are building our own CIBIL score for restaurants. And that's how we invite NBFCs to, do invoicing discounting, or, working capital providing to restaurants. So one of the partners that we are working with is BharatPe. So, they have a very quick onboarding process, deeply integrated into Supply Note, where restaurants can access credits, and using that credit, they can pay their invoices of suppliers. So that is how we do. Talking about the refund policy and return, of course, there is a proper QC team, and we have apps, solutions everywhere to validate whether it's an actual problem or something which somebody is just trying to take advantage of. So we do that. But the good part is that supplier is delivering to the restaurant directly. So it's not our liability as a business. We are just facilitating with our fulfillment capabilities and our SaaS solution. So that removes the entire liability on our business, and that makes it very easy to scale and not get into a fixed cut in your margins every time you're fulfilling something. So that is what I want to add on that question. Any more questions here?
Yeah, guys, if you have any more questions, please type it in the chat box. Right, we have Harshit, the CTO of Supply Note.
Sure. Yeah. I think I saw one more.
Sunil Garg is asking, how do you save food wastage for small players?
Good question. So Sunil, two things that we do. One is that we integrate with their POS system, and we ask them to enter their recipes, so they're able to see what is the trend in terms of their raw material usage. So they actually see whenever the chef is placing an order, They see what is the recommended quantity versus what they are placing order. So that is one. Now the second is, which is related to the general wastage. Of course, we cannot control that. But what we also do, and this is something that we have started doing, and we do that every year on Children's Day. So we work with restaurant partners, and whatever excess food that they have, we kind of help distribute it in the communities and in underprivileged societies. So this is something that we constantly try to do. Of course, we want to do a drive every month, but we have not been able to do that frequently. So this is how we have been able to channelize at least. Then there are certain CSR companies like Robinhood is one. Then there are more who eventually want to work with restaurants. So that's how we open the network for them. But as part of supply node SaaS and what are our capabilities, to the extent what we can do, we can just help them analyze their purchase and their wastage trend, and we can notify the owner that something is being wastage regularly so that they can take action.
Yeah. Great.
Yes.
So Rohan, following up on a question by Sridhar. So Sridhar's question was, once we are part of the syndicate, would we be having, now this might be the question for everyone, would we be having a detailed access to all the pitch decks as well as, demos for all the, startups that would be coming there?
Yeah, great question. I have also answered it in the chat for convenience of folks who are reading it. And also I would like to say that, yeah, anyone who, is part of the syndicate, of course, will get access to the company's deck, and also like occasionally get a chance to connect with the founders like Harshit himself directly as well during such events that we have. And yeah, I mean, you will get access to not just the deck, but also at what valuation the company is raising, who are the other lead VCs who are, part of that fundraise, and other things like that. So, like, be rest assured that you'll get all the required access. Also, in terms of, like, I've shared my LinkedIn link in the chat window for folks who want to connect with me and learn anything more as well. And I saw another question in the chat asking that what kind of legality or document we will get. So just to answer that, so that you folks are clear, that any fundraise that I am leading, right, I will be putting it on a portal, and you can pay and invest directly on the portal, and you can also track your investment on the portal. So I'll not be able to reveal the portal details on the call here, because it's only exclusively for folks who are part of my syndicate. But yeah, whatever fundraises I'm leading, you can invest in a portal and track it via the portal as well. And for larger, very large fundraises, which I'm investing myself as part of a bigger entity like, say, Tiger Global or Sequoia or SoftBank, for that cases, it is typically that the investment is on their name, but you will get an email confirmation that you have invested so and so amount in so and so company on so and so date, and you will have sufficient evidence for that as well. So both the cases, whether I am investing, that time you'll get a straight away portal where you can access and track, and for the bigger investments you will get an email confirmation, and you will be shared regular updates about how the company is performing as well via email, and also be most likely added to a WhatsApp group of the investors as well. So yeah, I'll make sure that is done as well for folks who are part of the syndicate.
Yeah. So what I'm going to do is I'm going to now open up the class for the next 5-10 minutes for any Q&A that students might have about the syndicate or about the bootcamp, right? And we can address all those questions. But before that, I've just put Rohan's LinkedIn profile in the chat box, and he's been an active angel investor, right, in the past few years, and has generated tremendous results for himself. Any and everyone who might want to, let's say, if you want to connect with him, if you want to give him a call, if you want to connect with through WhatsApp, then the best way is through syndicate. But in case someone else also wants to follow him, wants to get connected, I have also shared his LinkedIn profile in the Zoom chat. I would also share the same for Harshit. So if anyone is interested, you can connect with them. But more importantly, there were a couple of students actually
so small correction to that, 1 second, sorry to interrupt, Herman. The link that you have just shared is the link to a portal where I was featured as an angel investor. So I'll just share the link to my profile as well.
Yeah. But so sorry for that. And so I just wanted to, there were some questions that were regarding, the ownership of the shares once, we invest, right? I would also like you to address those. You address those in brief, right? But before that, I would like to unmute Mr. Sunil Garg, and I wanted to know his experience. He has also, he's been one of the enrollees for the bootcamp also, right? And I also wanted to unmute him and wanted to have a discussion with him that what was the, has he been already investing before, or what he wants to, let's say, what he's looking for in the bootcamp.
Thanks, Arman. No,
Hi,
I'm not.
Sunil.
Yeah, I'm not a previous investor, but yeah, what I like about this bootcamp class is like I'm getting a lot to learn, and I think that this is the best time to start because everything is picking up in the market. So yeah, very much interested. Maybe in future I'm thinking of few ideas that I can take myself help to get some investment.
Oh, that is nice. And Sunil, the membership of the syndicate would be for lifetime. So whenever, let's say, you even go for your own venture, so you can always access the base of all the investors that are there. Right.
Got a couple of more questions in the
Yeah.
chat, interesting questions, which I'll just pick up. So some folks asked, yeah, Nilesh, you already answered. Yeah, whoever is joining today, for them, it's for lifetime, and subsequently who sign up, it will be for 1 year. But yeah, the benefit is being a lifetime member at such a low cost. And also we had folks who are asking that whether this is they're confused about the process of investing. Like Satya Bharat is asking, isn't this crowdfunding and regulated by SEBI? So no, Satya, this is not crowdfunding exactly. This is a niche. Less than 0.5% of investors across the world, population across the world, who are accredited as angel investors, and we are associating with them. And yeah, any fundraise that I mentioned, like which I am leading, you will be doing the funding on the portal, which you can track yourself and pay on the portal and also track it. And for bigger fundraises, it is typically done by bank account transfers, which they will share, and those you will have email confirmation and regular updates via email, and even if you are interested, free WhatsApp updates as well. And yeah, that is about it. And coming to the taxation part, so if there is, you invest 10K and you get say 9.5K or 10K in worst case, in those scenarios there is not subject to tax. Only the profits are subject to capital gain tax, subject to the rules like of the startup country that you're investing in. So you'll be subject to those, and you'll be provided the profits. So Herman, someone is asking, I think Rohan Bandekar, he sent me a direct message saying, do we have a payment gateway link where we can pay using a card?
So I just wanted to clarify it for everyone. The link that I have shared in the chat, I'm just going to share it again. So this is the link of the website. Once you go here, there will be a button asking you to enroll. Just click on there, and then you are able to, pay for the bootcamp via UPI, via credit card, debit card, or even net banking. Right. So if someone also wants to, avail an EMI option, they can pay through credit card, and then they can, avail it for yourself on that link that is there. I've just shared it in the chat. In case you want, I can also open it up on my screen, and I can show it to you. So this is the process. So here is my screen, right? So what you have to do is, this is the enrollment link, right? So I just have to mention it once again. The discount for 33% is only valid till the class is going on, right? And we have only 3 slots remaining, right? So what you need to do is you just need to click on this link, right? You come here, let's say you put in your details. Let's say if I want to enroll, here are my details. Right? And I add my WhatsApp number. Okay. And then you can click on pay, right? Once you go here, this is the portal wherein you can, let's say, pay through credit card, UPI, net banking, right? So if you want to do an EMI, you can do an EMI over here, right? EMI on card, EMI on early salary, right? So anything that you want to do, you can just quickly access here. If you simply want to do through credit cards or debit card, you can do through here, and then you can, go and pay here. Okay. I also wanted to, confirm once again. So Rohan, once the, people, students would be a part of the syndicate, one, it wouldn't be, let's say, mandatory to invest in all the deals, right? They can choose the deals of their own liking. Correct. And the minimum investment would be 15,000, is it?
Yes. So minimum investment, sometimes it can be as low as 10,000 as well, but I don't want to unnecessarily advertise saying 10,000 and say that later on it will be 15,000. For select deals, it will even be as low as 10,000. And yeah, and 15,000 is option for all the deals typically. And yeah, I mean, also one more thing, I think Herman and I forgot to include in the presentation is, so you guys can join yourself, yes, but you know, if you refer your friends as well, like you will get a 1,000 rupees off, like basically that the moment your friend signs up, but it's not applicable for folks who are registered in this workshop. You can't say that, you know, me and my friend have joined, I'm referring my friend. If you're referring your friends and relatives for any of the enrolling for the syndicate, the moment they enroll, you will be paid 1,000 rupees back as your referral fee. So that's a good chance to make money yourself as well. Like, for example, you refer 10 folks, then your membership is for free. So yeah, you will get a added benefit of 1,000 rupees for every folk, even who signs up today, specifically only today. You will get 1,000 rupees per referral, but you will need to share those details with Herman or me. Like, we have our LinkedIn and other things, and I'm sure Herman has shared other details as well. So you drop a note that I'm referring this person and this person will be signing up. So once he signs up, you will be accordingly paid out 1,000 rupees. Am I right?
Yeah, completely. And I also wanted to let everyone know that, during this class, everyone who's, enrolling, I'm going to put the enrollment link once again. So Rohan, we have only 2 slots left. Right. The thing is, even if you're interested, but if you enroll after this class, so there would be 2 things. One, the price would be 15,000, and the membership of the syndicate would only be valid for 1 year. Right. So all those who are still thinking to enroll, right, if you enroll right now, you get 3 benefits, not only 2. One, the discount you get at the discounted price, that is 9,999. Second, the membership is for lifetime. Third, because there are 2 slots still left in the top 20, you also get ebooks worth rupees 3,000. Right. And once you enroll, we'll be adding you in a WhatsApp group along with Rohan, and then you can carry on your discussions. Right. So I'm just going to share the enrollment link once again, and I'd also request anyone and everyone who has any questions to please ask your questions. What I'm going to do is, once I've shared the enrollment link, I would be allowing everyone to directly unmute yourself, and then you can just unmute yourself. I would prefer if you can raise your hand and then you can ask your question one by one, so there is lesser chaos. So I've given you the permission to unmute yourself, and I will also share the enrollment link in the chat, so you can quickly go and enroll. And if you have any questions before that, please feel free to ask all those questions. Right. Sridhar's question is, hi Rohan, if we invest via your syndicate, apart from the email and portal, will we also get any financial instrument, say CSOPs, CCDs, and AIF units, or direct cap table?
Very good question, Sridhar. So yeah, thanks for bringing this up. So basically, you will get preferred shares, which is like, the shares which anytime a company is raising more capital, like more funds, or gets acquired, etc., or goes public, you will be the first ones who will get access to selling those shares. So not everyone gets access. So for example, you say you are an employee of the company, even then you get ESOPs, but even those are not preferred shares. And yeah, like preferred shares is shared with a select bunch of investors who are accredited investors, and you will be getting preferred shares who will have the first right of exit. So just the small caveat here is that the exit is controlled by the syndicate lead. Based on their experience, they will take a call when to exit. So yeah, that is a small caveat. But then yeah, it's called preferred shares. You can check it up online. Like, that is the class of shares that you get.
Yeah.
So it's kind of the highest possible premium shares of any type possible, after maybe the board of directors of the company.
Yeah. So I just had an update. Rohan Bandekar has also enrolled. Thank you, Rohan, for enrolling. Right. So now we only have 1 slot left in the top 20. So it is up for grabs. Anyone and everyone who's left, you can please quickly go and register for yourself. Right. So I'm just sharing the link once again. Here is the link. Okay. So guys, what you can do is you can also directly unmute yourself, right, and enroll for yourself.
And one final thing also which I wanted to add is basically, it's apart from the syndicate, like joining the syndicate, that's not the only benefit. Like you will be part of, like we mentioned, but we didn't cover enough, is that there is a 7-day detailed investment boot camp that you will get access to, that where I will be personally, teaching how I invest in companies, how I evaluate, with taking examples of multiple startups, and also include some of their founders like Harshit to pitch live to you. And then after that as well, you can decide whether to invest or not. So it is basically a twofold access that you're getting, one being a part of a syndicate, and also getting access to a like 7-day detailed boot camp where I will be covering various things, like which Harman is sharing right now. So those are the things that will be covered.
So guys, there is one slot left. You can quickly go and enroll. So there was one question on
Harman, like, if there are more folks, we'll open 3-4 more slots. Like, let's not, I mean, if at least for this, while the workshop is going on, let's make sure that people who are interested, like, we will keep some buffer and maybe have, say, 5 more slots, so that whoever is interested signs up now and still gets the benefit rather than on the 33.
As you say. So guys, what I'm going to do is I am just going to launch a contact pool. Everyone who's interested but hasn't, let's say, enrolled till now, I would request you to please fill up that contact pool. And if there are, let's say, a number of people who are still willing to enroll, but they aren't enrolling because there are lesser slots left, we are fairly open to increasing the number of slots. I would request everyone who's still left to please fill up the contact information pool. I have just shared it across the screen. Right. Till the time people are filling it up, Rohan, there was a question, on preferred shares, right? So the question is by Nilesh: do these preferred shares also provide the right of refusal for any subsequent round?
Yes, Nilesh. So yeah, basically you don't have to mandatorily invest in the next round. Like, you can choose to, I mean, it's chosen by the syndicate lead typically whether to exit or continue, keep holding their shares, or if you want to invest more, it's an optional, it's not a mandatory, but you enjoy the great benefit of proprietor rights on most of them. That is, you will get a 20% discount on the next round's share prices. So yeah, great question. And yeah, that's something we should cover, that there's a 20% discount associated in the next round of share purchase.
And I just wanted to, add on to a question asked by Devesh. So Devesh's question is, and this might be a question for others also. Devesh's question is: I want to attend the bootcamp, but I'm not available on these dates and time. How can we access it later? So Devesh, there would be 2 options. Each and every bootcamp class that we do, we share the recordings of it on our WhatsApp group, right? And then post it, you can watch the recordings. If in case, let's say, you want to discuss, you can discuss it on the group with other investors as well as Rohan. In case you want to attend it live, then whenever we're doing it next month, at no extra cost, you can be a part of that bootcamp also, and this is for everyone, right? So you can attend those classes again and again, and I would encourage you to do it, so because it keeps updated. And also each month would actually be doing live. So I just have to mute Vanam Ali. There is a lot of disturbance from the side. Just give me a moment, please.
Yeah, so just to add to what oh, sorry, I was on mute. Yeah, basically, just to add to what Herman said, if you are not available on specific dates of the workshop, please let Herman or me know, and we'll make sure that like, you are compensated for the same classes by adding to the next bootcamp. So we generally run bootcamps every month, and yeah, the price of this is applicable today. And yeah, like, anytime you register, you will be given, if you're not available in the next, you'll be given the option of the next and 1 or 2 more options that you can possibly attend. But yeah, like, it will not be valid for lifetime, like maybe specific next 2 or 3 schedules.
Yeah.
And yeah, the membership only is for lifetime. Syndicate membership for folks who join up today, it will be valid for lifetime. Post that, it will be for a 1-year membership.
Yeah. So Rohan, we have increased the benefits for the next 5 enrollments, right? So everyone, Devesh, Sridhar, all of you can quickly go on the link and you can register for yourself. You can pay via credit card, debit card, UPI, even net banking, right? If you have, let's say, a credit card, you can also do a EMI.
Questions? Sam, if you feel that way, it's true. I mean, everyone has their own opinion. So yeah, I mean, if you feel that we are just marketing, you're welcome to have that opinion. But I have shared actually my portfolio and shown how I've made 35x and 5.5x returns. And you'll not find too many such angel investors conducting workshop and showcasing their portfolio live and companies they're investing in live, and also bringing in founders to validate that, not just talking but actually proving it. So yeah. Okay, all right, thank you everyone. It was great having you as part of the workshop, and look forward to having you attend the bootcamp for all of those who have registered.
Yes. Hi Herman, Rohan, I have just one question if you can allow me to ask.
Yeah, please.
Yeah, so do you also give access to international startups as well outside India?
Yeah.
Yes, the majority of the startups are actually from the Bay Area. There are a lot of Silicon Valley based startups, and a lot of interesting Indian startups as well, like Supply Note, which Harshit is building along with his co-founders from IIT. Yeah, I mean, even in my investments, typically 80% of my investments are in the US Silicon Valley region, like the ones even I shared my screen. Spenmo is a Singapore-based fintech, which is at 35 times. And yeah, it's basically US, Southeast Asia, India, and Europe. That is the different companies, areas that I'm investing in.
Okay, great. Thanks, Rohan.
Yeah,
Great.
sure.
Great.
So just to add, like couple of days earlier, to answer Sridhar's question, couple of days back, I just invested in SpaceX, which is Elon Musk's next big company after Tesla. So that investment is still open. Basically, anyone who wants to invest in SpaceX can join my syndicate and contribute to investing in SpaceX, which is projected to grow big, like how Tesla's stock has gone up multifold. Likewise, SpaceX is right now open for investing.
That's good to know. Yeah.
That's a big opportunity, actually.
Yes, already a lot of people who are part of the syndicate have expressed interest, and some of them are saying that we just don't want to invest 15,000, but we want to invest 50,000, 1 lakh. So there is no such minimum or maximum. You can invest up to any big amount, and starting from 10 to 15,000, 15,000 in most cases, but select deals even 10,000. So there is one final question that I'll take from phone. If I invest 5 lakhs with your syndicate, how much return can I expect in 1 year? So phone, don't know your real name, but it is basically, like I mentioned, it's for the longer term. You don't get returns in one. I have got occasionally returns in 1 year when the company got acquired successfully, and I still made 20-25%, but it's not in your hand. It's on the syndicate lead's hand how much you will get. When you will exit from it. So you are only going to invest funds here, which are okay to park for a long period of time, minimum of 3+ years. When you are lucky, you get returns in 1.5 years as well. But in most cases, startups take time to grow. And if you want good returns, it should stay invested for a long period of time. All right. I think we've answered all the questions, and it was great having you all attend the workshop. And thanks, Herman, for being a great host and modulating the session, and Harshit for joining and talking about Supply Note. I'm sure a lot of folks found it interesting and would want to contribute to investing in it.
And we hope to see everyone in the syndicate in the bootcamp, right? And one thing for all of those who you have enrolled, we'll be giving you a call after this class, and we'll also be adding you to a separate WhatsApp group as promised with Rohan, right? And any and all the questions that might have been unanswered today, please feel free to ask all those questions, and you can get access to early deals even before the bootcamp begins, right? So you get all those benefits. And anyone who's still left to enroll, what you can do is here is my phone number. This is also my WhatsApp number. You can just feel free to connect with me after this class, right? And then I can do the needful. Okay. Thank you, Rohan.
Herman, where is the number? Sorry, I have some trouble logging doing it.
It's in the chat box.
Okay, fine. Yeah, I'll maybe ping you.
Okay.
Yeah, folks who are interested in copying, like this chat will not be accessible after the call. So please copy. We'll give you 30 seconds to just copy the number or links if you want to pay directly, so that you have it handy. And then we'll end the session after that.
Yeah. Okay, thank you, Rohan. It was really wonderful having you here. Right, I know you're busy and taking time out, for this session. It really means a lot for us, and we are hoping and looking forward for the bootcamp.
Yeah, thanks for having me, and it's a pleasure to talk to the audience here. A lot of folks are very knowledgeable, like Sridhar and Nilesh, etc. And yeah, it was also wonderful having some of them sign up for my syndicate, and look forward to investing in great deals alongside you guys and having you part of my syndicate.
Okay, thank you, Rohan. Thank you, everyone. Okay, bye bye.
Okay, bye guys. Thanks for your time. Bye.